We're right now basically almost at World War II levels of the debt to GDP ratio, and there is no World War II happening right now. This is really bad. And basically, if you look at the math, we have no more than 20 years before there's a bond market failure. So it's pretty bad. Don't sell your Bitcoin because this problem is only getting worse.
Welcome, everybody. I am Frank Corva, the political correspondent for Bitcoin Magazine, and we are here with, I think this is really technically our first episode what is officially the Bitcoin Politics Show. So I'm super pumped to have an incredible guest to kick things off with me, Avik Roy, co-founder and chairman of the Foundation for Research on Equal Opportunity. Avik, thank you so much for taking the time to do this.
Hey, Frank, it's good to be with you. And we have to also mention that I'm the senior advisor to the Bitcoin Policy Institute, since you've got the BPI logo behind you there.
This is a fact. We would be remiss not to mention that. Yes. So we have, as I said, a perfect guest to kick off this show here. We have done a few episodes of Bitcoin Politics, but I think this is our sort of first shot at a weekly show. So again, great guest to start things off with. Speaking of the Bitcoin Policy Institute, they also published this book, the Satoshi Papers, for which you wrote one of the chapters. And that chapter is called "And Then They Fight You." But I'm here in Washington, D.C. today. And the Genius Act just passed through the Senate and the House again, and now it's going to be heading over to Trump's desk to be signed. I have to say the vibe here in Washington, D.C. is not "then they fight you." It kind of seems like in some ways, when we're looking at maybe the broader crypto landscape, it seems like we're winning. We'll get into who we are today and maybe the bifurcation between broader crypto space and Bitcoin. But your thoughts on what just happened today?
Yeah, look, it's a big milestone to get the Genius Act through, and also some progress with some of the other companion legislation, the market structure legislation, some potential banning of CBDCs by at least at the Federal Reserve level. We can get into all the details of what those bills do that's promising, what those bills do that are not promising, or that are maybe things for concern or gaps to fill. But let's start with the big macro point, which is I think the Bitcoin community has matured a lot. I wrote a piece that you know about, Frank, called "Bitcoin and the U.S. Fiscal Reckoning" 4 years ago. It was published in 2021, where I proposed actually a Bitcoin reserve, not thinking that we'd make so much progress in this short period of time. But the main point of that article in 2021 was to say, look, at the time, the conventional wisdom in the Bitcoin community was, look, we are a permissionless, censorship-resistant network. It doesn't matter what governments do. Who cares whether Washington hates us or loves us? Bitcoin will soldier on. And while that's technically true, what I argued in the piece was that actually Washington can do a lot to make Bitcoin less useful in the world we live in today. It can make it impossible for you to exchange US dollars for Bitcoin. It can make it very hard for Bitcoin to be used for everyday payments. There are lots and lots of things that the US government can do to make Bitcoin less useful for a lot of the things that Bitcoiners want it to be useful for. And in particular, the government can basically squash the ability of Bitcoin to interact with traditional financial instruments. So my argument at the time was, Bitcoiners, we do need to pay attention to what's going on in Washington. We need to do a better job of having a presence in Washington, advocating for some of these structures, so that if and when the U.S. government decides it wants to fight Bitcoiners, Bitcoin is more resilient to that attack. And I think what today is it's a milestone in that journey in which we make Bitcoin hopefully a little bit more resistant or resilient to a future government attack.
Okay. I'm going to play the devil's advocate, if you don't mind. So this was a stablecoin bill. We know that this will be beneficial to the U.S. Treasury, to the United States at large. It gives them entities, if you will, stablecoin issuers, to sell their at least short-term debt to, as we've seen with Tether. So is this a win? Can we say this is a win for Bitcoin, or is this a win for something else? Is this a win for the United States dollar continuing to really be a very significant challenger to Bitcoin becoming money?
Well, this gets us to the book that you just waved on the screen there, because in my article, "Then They Fight You," or the chapter in that book, is also on the FREOPP website and the BPI website. The takeaway from that article, and the basic point of the article, is to say, okay, if there is a fiscal collapse 10 years from now or 20 years from now, and the U.S. government tries to do like the Venezuela style capital controls where they really make it hard for people to move their money into Bitcoin. Again, they can block the exchange from US dollars to Bitcoin. How do we make Bitcoin resilient to that attack? And one of the things I pitch in that piece as kind of a takeaway is Bitcoiners have a stake in the evolution of the stablecoin ecosystem, which again is a somewhat contrarian point. We would say, well, who cares what happens with stablecoins? It doesn't have anything to do with Bitcoin. And my argument is that not only do we need Bitcoin to be censorship resistant and permissionless, but we also need the rails in which fiat money is exchanged into Bitcoin to be censorship resistant and permissionless. The right design of stablecoins is actually pretty important for having censorship resistant exchange of US dollars into Bitcoin. Now, how does that relate to the legislation that just passed on Capitol Hill? The Genius Act is not censorship resistant stablecoins. It's exactly the opposite. So the Genius Act, actually the text of it specifies that all of the banking laws and kind of surveillance state stuff that the US government does in the fiat world will apply to US licensed stablecoins that banks issue and Circle and Coinbase issue and things like that. The US stablecoins that will be licensed through this legislation will not actually create that permissionless, censorship-resistant stablecoin. You'll need to go offshore to use something like Tether to have anything remotely resembling that. So that's the bad part. But I think you weren't going to get legislation that did anything else. Congress is not going to pass a law that didn't allow for those kinds of banking rules to come in. So that's the bad part. But the good part is allowing banks, allowing traditional financial institutions to learn how to use stablecoins and get used to how blockchains work. That's the win, because that's kind of the gateway drug to the more advanced and resilient stuff that Bitcoiners know very well.
Yeah, I want to play devil's advocate one more time. I would even say with Tether is well known for freezing, when they work with the FBI, with the authorities for freezing accounts. And these accounts can be frozen using smart contract technology on the blockchains on which Tether runs. So I think I understand your point for sure. I think Tether being an entity that is located outside of the jurisdiction of the United States, I get that point. I was curious when I heard that Tether was going to run on Lightning, thinking to myself, well, that might be the thing that makes it censorship resistant. I actually spoke with Elizabeth Stark about this, Lightning Labs, Elizabeth Stark. They are the ones that facilitated this through Taproot Assets. And I asked her, I said, will this be censorship resistant? She just said, no, this not. So we're not there, to your point. And I think, yes, to some degree, I think we do need to get there. And you gave a great talk on this. It was at the University of Austin. The government might be okay with maybe Bitcoin proliferating more if also the dollar is proliferating and maybe even the dollar running on Bitcoin rails and people being able to swap in and out interchangeably. But it does seem that we're kind of far away from that reality. Did you want to add anything to that?
Yeah, I just want to say that I agree with you that offshore Tether is not censorship resistant, but on a relative basis, it's a more open network than the stable coins that the Genius Act will enable. Those are going to be very censorship compatible. And so I bring all this up just to say the bottom line is Bitcoiners actually have a huge stake in the evolution of the stablecoin market. And hopefully this moment in which Congress is passing legislation about stablecoins helps Bitcoiners think more and more rigorously about what censorship-resistant stablecoins could look like, particularly ones that could be in a decentralized exchange for Bitcoin. That's really important to Bitcoin's future, I argue.
One of the things I did want to touch on, and you mentioned it a little bit earlier on, there's some stuff to be celebrated in these bills. Partially part of the reason I wanted to speak with you is because at the Bitcoin Policy Summit a few weeks ago, you pointed out a few sections of bills that are maybe, let's say, not to be celebrated, things that Bitcoiners wouldn't necessarily be excited about regarding censorship, or if you're transacting with certain parties without even knowing it, you might be committing some sort of, being part of some sort of fraudulent activity as per OFAC. So I was wondering if you could get into a little bit of that. I know that you're one to dig into these bills. You talked about this with Congressman Davidson on stage at that event. So I was hoping maybe you could give us some of the pros and cons here. And with the cons, especially maybe some of the things that people haven't really been talking about or paying attention to.
Yeah, it was really interesting being at the Bitcoin Policy Summit and talking about that issue, because what I discovered is that I was really worked up about it, but most of the thrust of the action in terms of what the sort of the industry was lobbying for with these bills was not related to that. It was more related to the service providers. Like, how do we make sure that the service providers and the technology platforms are not being prosecuted as for transmitting money, et cetera. There was a big victory there in in the legislation, but this point about stable coins and the censorship enablement with stable coins or Bitcoin for that matter, was much less prioritized, I would say. And so the language in the bill says you are allowed to self-custody Bitcoin so long as you do so in a way that's compatible with all of these kind of, TradFi surveillance entities. And so it's not all the way there. Like, so to the degree, Warren Davidson, the congressman from Ohio, has been advocating. He has a bill called the Keep Your Coins Act, which is much cleaner, which says, yes, if you self-custody Bitcoin and you send Bitcoin to someone else on the Bitcoin network in a lawful way, that's legal, plain and simple, no questions asked.
Yep.
The legislation that Congress has passed has many more loopholes for the SEC or the Treasury Department or the OCC, all these kind of alphabet soup agencies, to come in and say, no, we don't agree that was a lawful exchange. We're gonna still come after you. So that's a concern. Now, I will say that, just to be clear, the legislation that's passing Congress today does not make things worse. It just codifies basically what already exists, that if you do something the U.S. government doesn't like, they're entitled to go after you for it.
Does it worry you that some of this power that you talked about before that, so we know that this sort of exists, but does it seem like something that maybe not just this administration, but that eventually some administration will start abusing, in your opinion? I mean, is it just something that maybe as policy wonks we're paying attention to and thinking, okay, this could happen? But I would say, like, in terms of cause for concern, where do you rate that on a scale of 1 to 10?
Maybe six
Okay.
or seven, maybe six, because again, it codifies what already exists. So in that sense, it doesn't make things materially more dangerous,
Okay.
but it does make it harder, because now you'll have to pass a bill if you want to fix what's in the Clarity Act and the Genius Act. So in that sense, it makes it a little harder to fix, and the government again is not going to really want to fix it, because it's not in the government's interest to fix it. That's why, again, I think it's incumbent on Bitcoin developers and people with tech talent to really think about, we need more resources with Bitcoin core development anyway, but we also need, as Bitcoiners, to spend some of our tech talent on censorship and censorship resistant and permissionless stablecoin bit to Bitcoin exchanges. So there are people working on it. Some of the stuff is based on Lightning and Nostr, as you indicated. Yep. So I think that's part of the equation there. So I would say six.
Okay. Stable coins in general, you just talked about this idea of a potential Venezuela style collapse. And I think most people would just say, why is this guy Avik so hyperbolic? Why, this is the United States of America, the US dollar. And, we know part of the reason the US dollar has continued to be successful is because even when we left the gold standard, we had the petrodollar. And I think now the petrodollar is sort of transitioning into becoming maybe the crypto dollar, the stablecoin dollar. But I think Seyfettin Ammous gave a really good talk on Tether and other stablecoins at the Bitcoin 2025, our conference. And he said, okay, yeah, for a while this is going to help, but it's not going to help for as long as maybe some people really think. Your thoughts on that? Do stablecoins maybe proliferating for the next 5, 10 years? I mean, what does the time frame maybe look like until we really get to a point where the situation just becomes so out of control that even stablecoin proliferation can't necessarily save it?
Yeah, there's a lot to say here. First thing that's really important to note about the Genius Act is that, which is the stablecoin bill, for those who haven't been following all the bill names, the stablecoin bill, and Arthur Hayes actually wrote a really great Substack about this recently. The reason this passed is because the banking lobby supports it. Yes. And why does the banking lobby support it? Because there are all these restrictions in the Genius Act that basically make this U.S. licensed stablecoin sector uncompetitive with, or not superior to, what banks already do with fiat deposits. So there are theoretically lots of things you could do with stablecoins that you're not going to be able to do in this bill. To give an example, so how do stablecoins collateralize their assets? They own Treasury securities and other similar debt instruments, right? That today have a yield of, let's call it 4.5% plus or minus. In theory, you could pass some of that yield on to the holders
Yep.
of the stable coins, but they're not allowed to do that under this legislation, precisely because the banks wouldn't allow it. So basically, the banks came in and said, we will support the stablecoin bill so long as stablecoins are basically no better than what we already do. So they really weaken the quality of what stablecoins will do to make this bill pass. That's number one.
Yep.
Number two is to your point about, like, can the increasing demand for stablecoins and therefore the increasing demand for Treasury securities that stablecoins represent, can that help address our fiscal situation? Yes, up to a point, right? Like, if you rack up hundreds of billions of dollars of debt, there's only so much stablecoins can do to soak up the excess supply of Treasury debt that we're issuing. But does it help on the margins? Absolutely. And that's, I think, one of the reasons why Republicans, in particular, Scott Besson has talked about this. Paul Ryan, actually, several years ago, wrote an op-ed in the Wall Street Journal, which introduced this argument. So this is, I think, it's been a smart idea. I think that's one of the things that got stable coins over the finish line, is I think a lot of people in the establishment, so to speak, have come to appreciate that stable coins can help finance the debt by being a buyer of Treasury securities. But in the end, the ocean of debt that we are piling up is going to overwhelm even stable coins, I fear.
Yeah, so I wanted to maybe dive into those numbers a little bit. I remember your talk again at the University of Austin, and I always find it so interesting. You have this very dire situation you're painting when it comes to our debt, but you're such a mild-mannered, polite human being that this juxtaposition just sticks in my head so much. It's like this doomsday scenario you're painting, but you're doing it in such a you're delivering it in such a comforting way almost.
I got to channel some Max Kaiser. Or
Let's go.
You got a little bit more, have my hair go a little crazy.
That's right. We're going to get Avik to turn it up. That's right. Could we talk a little bit about the deck, the macro picture?
Yeah.
Maybe touch on a little bit of what you talked about that day and what you've talked about in many other events. No one alive has lived through any sort of major debt crisis like that, so there's no real frame of reference. But where are we at? How worried should we be? What do the numbers actually look like?
It's very bad, and one of the reasons why I say that is it's actually a lot worse than the official government estimates. So the Congressional Budget Office is the nonpartisan scorekeeper that works for Congress that provides what you could say are the official government estimates of future spending, future tax revenue, and the future outlook for the debt and deficit. And based on their estimates, things are pretty bad. We're right now basically almost at World War II levels of the debt to GDP ratio, and there is no World War II happening right now. And in 10 years, we'll be way above that. We'll be at basically unprecedented levels in terms of the debt to GDP ratio, way higher than we had in the Revolutionary War or the War of 1812 or the Civil War, let alone World War II. So that's the good news, actually, because the problem with the congressional budget's estimates, believe it or not, is that they're wildly optimistic. They assume that economic growth, GDP growth, will be 3.6% per year forever. That's like 1980s to 1990s economic growth forever.
Yeah,
and we haven't even had average 3.6% economic growth the last 10 years, let alone, in the future when things are going to be a lot harder with the debt and deficit piling up. So that's problem number one. Problem number two is that the CBO assumes that you're going to be able to borrow at 4.5% basically forever. They up it a little bit, like it goes up to 4.6, 4.7, but they assume that we'll be able to borrow at current rates forever. And that is not happening if the debt to GDP ratio gets a lot worse.
Right.
And so I basically reverse engineered the CBO model. What I did to the model is, okay, let's assume that the economic growth isn't 3.6%, but 3.0%. So 60 basis points or 0.6% lower every year. What does that do? It basically takes that debt to GDP ratio from about 100% where it is today to about 600% in 20, 25 years. And that's assuming that no future Congress passes any other legislation that increases the deficit. It assumes there's no wars, no pandemics, no crises that want us to spend more money, lead us to spend more money. It assumes that everything is great for the next 25 years. So this is really bad. And basically, if you look at the math, we have no more than 20 years and probably more like 10 to 15 before there's a bond market failure, the way we're going right now. So it's pretty bad. Don't sell your Bitcoin because this problem is only getting worse. And certainly, look, at my day job at the Foundation for Research on Equal Opportunity, we work on all this stuff. We come up with ways to fix the entitlement crisis, how to make healthcare less expensive so Medicare and Medicaid and Obamacare are less costly to the taxpayer. We work on all that stuff. So we're doing that work every day to try to head that crisis off. But if we do nothing, if we go on the course we're on, it's going to be pretty bad. And my kids are 8 and 7. This means their entire adult lives are going to be overwhelmed by this problem.
Yeah. As I was saying, ladies and gentlemen, that's the that's the sort of picture he paints. But again, the way he delivers it, it doesn't sound as threatening. But really appreciate, especially you breaking down the numbers. When you hear someone like Scott Bessent, U.S. Secretary Treasury, talking about growing our way out of this, after passing the one big beautiful bill and the power of AI to sort of maybe hyper scale or juice up growth, is there any validity to this? Is he just sort of saying what he has to say to sort of keep the panic at bay? Your thoughts on that?
GDP growth, economic growth really does matter. It's like the power of compound interest. That 3.6% year over year over year over 20 years versus 3.0% year over year over year over 20 years. Huge delta. It's the difference between 200% debt to GDP ratio and 600% debt to GDP ratio. So if you had 4% economic growth, that would make it even better. But it still wouldn't be, that would make it less worse, I should say, right? Because you're still going to have record levels of debt. You're just going to have record levels of debt at a lower magnitude than under the scenario that I'm painting. So more economic growth, by all means, we should have it. But you've got to cut spending. Basically, if you look at all the statistics, what's interesting is tax revenue as a share of GDP is very stable. It doesn't matter what the actual tax rates are. Somehow people figure out how to optimize for whatever the tax regime is. And we basically are able to raise as a U.S. federal government about 17 to 18% of GDP every year for tax revenue. But it's the spending that's been going up and up and up. It's not a problem that you can fix by raising taxes to get half of it and cutting spending to get the other half. You've got to get the spending under control. And we are pretty far from having been able to do that. I will say that the One Big Beautiful Bill Act did cut spending in pretty significant ways. I think about $1 trillion plus or minus, depending on where the math finally ends up, over a 10-year period. So that's not nothing. It did obviously preserve the 2017 tax cuts, which the CBO scores is increasing the deficit significantly over the next 10 years. We'll see exactly how those estimates play out. But I think they needed to keep the tax rates stable because that does drive economic growth. The problem is that you need to cut spending more, and they were only able to get so far with the votes that they had. So there's still a lot more work to do there. And again, that's what think tanks are for, is how do you actually cut the spending in a way that lower income and middle income people feel that their benefits are not being cut, that their benefits are being protected? Can you actually reduce the cost of healthcare so the cost of subsidizing the healthcare is lower? Can we stop subsidizing rich people and really focus our subsidies on lower income people? Believe it or not, we spend a lot of money subsidizing wealthy people who don't need the help. And if we just did less of that, we wouldn't have to raise taxes on them.
Yep. Yeah. Agreed. One thing to clarify, when you talk about spending, so one of the big sort of talking points that gets circulated a lot in the Bitcoin space is this idea that now we spend more financing the interest on the debt or paying for the interest on our debt than we do even on the military industrial complex in the United States, military spending. When you talk about spending, is that expense, that idea of financing the interest on the debt, or paying for the interest on the debt, is that included in your calculations, or are you talking more about like medical benefits, Medicaid, things that more like what's the word?
In terms of the overall deficit and debt picture, the interest costs are included.
Okay,
but you can't cut spending on interest. To do that would be a default.
Right. Correct.
And I've long argued that inflation is a form of default. By devaluing the dollar, you're basically making the debt worth less, which is the easy way to default, and countries have been doing that for many centuries. And we do that too, but a true default where you say, okay, this bond is supposed to pay 4.5%, but I'm only going to pay you 2%. That's like a hard default, let's call it. We could cut spending by doing that. And we, frankly, and I talk about this and then they fight you, if we keep going on the track we're going on, we're going to have to default on the debt in a structured way. What's the best case scenario in my sort of 20-year picture that I'm painting here? We basically do a structured default, kind of like what General Motors and Chrysler did during the financial crisis, where you do a default on your debt, a partial default, in exchange for the entitlement reforms, the Social Security reforms, the Medicare reforms, and perhaps pegging the dollar to Bitcoin or issuing Bitcoin containing Treasury securities in the future, the BitBonds type idea that Andrew Holmes has talked about. So I think those are some of the tools that we could use to get out of this mess. But a partial default on Treasuries would be catastrophic for the financial sector. Basically, you think about every bank that holds Treasuries as their kind of base asset and has a leverage ratio of 10 to 1 or 20 to 1 or 40 to 1 or whatever it is. And that's going up right now because Besson actually lightens, or I can't remember if it was Besson or the Fed, but one of those two lightened the supplementary leverage ratios that banks have to have. So if you haircut those bonds, basically almost every bank in America goes insolvent unless those banks have anticipated this possibility and reduced their leverage ratio and to be ahead of the curve, which may happen in some cases. But a partial default on U.S. debt would be disaster for the economy. The only thing that would be worse is a complete default, right? So a partial default with restructuring would at least allow the bond investors to say, you know what, I'm mad that I'm losing my money here, but this was the thing that we had to do to have the next 50 years turn out okay. Kind of like what's happened in Argentina, where Milei has said, look, we're gonna rip off the Band-Aid here and it's gonna hurt for a while, but eventually that's what we need to do to get out of this inflation debt trap. And Milei is seeing a lot of success with that model. So it'd be kind of like that.
Let's talk about how Bitcoin fits into all of this. So I was in the press room today with Caroline Levitt, asked her about something that Trump himself mentioned in the press room, which was this idea of a de minimis tax exemption for Bitcoin payments of $600 or less. I personally feel like having the president of the United States just talk about Bitcoin as money on any level is a win. Curious as to what you thought. And, some people complain, well, $600 isn't enough. But my thoughts are like, you have to start somewhere. And I think the bigger message being sent there is that Bitcoin is money. You can go make, you can go buy anything with it, but you could go pay for your coffee. You could go pay for a flat screen TV if it's, under $600. I think that turns Bitcoin into something new for maybe the minds of people outside the Bitcoin space. So like, what do you mean you could go pay for something with Bitcoin? Most people just think about it as, I don't know, some Wall Street thing, number go up technology, a Ponzi scheme, however they think about it. But, a lot of people who are still, I say this facetiously, the no coiners or the people who are, have their reservations about it. I think it does something to potentially change their psychology to say like, oh, some places now accept Bitcoin, more places accept Bitcoin more than just PubKey in New York or this sort of Bitcoin themed restaurant or Steak and Shake. But just curious as to what you think about that. Is that at the first step in sort of maybe beginning to change our psychology around Bitcoin, getting out of just the store of value narrative, and then having people think about it more broadly as money? And then what does that lead to?
Look, there's no doubt that a de minimis exemption would turbocharge the ability of Bitcoin to be useful for payments. As we alluded to earlier, like today, if I want to go to a Starbucks and spend my Bitcoin, yes, if I've got Strike or some other technology underneath it, it's a little easier than it used to be to actually spend my Bitcoin. But it's technically a capital gains reportable event,
right?
A taxable event every time I spend my Bitcoin today. If I have a cost basis that's different than 120,000 or whatever Bitcoin's doing at the moment. That's where this de minimis exemption comes from. Senator Cynthia Lummis tried to include that in the One Big Beautiful Bill Act. She failed basically because the Congressional Budget Office or the Joint Committee on Taxation scored it as something that would increase the deficit, and they were already, up against the limit that they decided on in terms of how much deficit increase they wanted to get to. So they didn't put it in there. That was unfortunate, but Lummis has introduced it as standalone legislation. And so in that context, it is helpful that the president has endorsed that legislation. It does require legislation, something the president could maybe wave a magic wand and do outside of legislation. But I will say that for me personally, and this is an area where I'm, I don't know if contrarian is the right word, but a little maybe on one side of the debate. I do think that what's most important for Bitcoin by a wide margin is that it's a great store of value. Like, when I was in Europe for a couple weeks this summer on vacation, it didn't matter. Like, I didn't have to go to the ATM and pull out, euros or Swiss francs or whatever. I could just use my American credit cards to buy whatever I wanted to buy, right? If all this stuff is done on the back end, it doesn't actually matter what currency you're actually spending on the front end,
Yeah.
right? So if I'm in a French hotel and I'm spending euros, but it's being deducted from my U.S. credit card and my U.S. bank, does it really matter that the medium of exchange was euros and I don't own any euros?
Right.
And Bitcoin, I think, is the same, so long as this capital gains piece can be taken into account. So for me, whether Bitcoin is a method of payment directly or not is less important. But I do appreciate that is the Satoshi vision, that it would be electronic cash, and obviously a lot of people are working hard to advance that vision. That's great, and I root for them. But I would say for me, the most important thing to protect is the store of value, and the most important thing we need to do to protect Bitcoin's role as a store of value is ensure that U.S. dollars can be exchanged for Bitcoin in a censorship-resistant way.
Appreciate that. I'm curious. One of the, as you were just talking about that idea of the instant conversion with the credit cards, I'm curious if you're following this trend around the world of these lightning to fiat payments. So I was just in Kenya using an app called Tando, which is just, it was amazing, where I could pay my cab driver, I could pay my restaurant bill, whatever it was, using their M-Pesa system. While on the back end, when I was using the Tando app, it was drawing from a Lightning wallet of mine, paying in their fiat currency, their medium of exchange. And do you foresee maybe a future like this? And I don't know, when you talk about Bitcoin potentially backing the dollar, I mean, is there any, this is a little bit of a different sort of scenario, but I'm curious as to what you think about this sort of thing, because again, it's most people are still sort of holding it as a store of value, generally speaking. But then when they do need to spend something and maybe interface with a different system, they can go and do that, much like the way Strike does here in the United States, as you mentioned. Do you see more of maybe that happening? Maybe not on a huge scale right now, but more people just getting comfortable with something like that, maybe especially if the dollar does continue to lose a lot of value and more people save in Bitcoin?
Yeah, I think, look, I mean, M-Pesa is such an interesting story for those who aren't familiar with it. It's basically this now fairly old technology, several decades, where through the invention of cell phones, a lot of Africans would say, hey, they figured out this very sort of dumb phone, text-based way to exchange money on this M-Pesa network. And now that network was a way of basically of leapfrogging the fact that you didn't have the banking infrastructure, which has been really great for Kenya and Tanzania and some of those other countries in East Africa.
Yeah.
It's really cool that you got to go and see it for yourself and how Bitcoin is integrating to that. And I think this goes to a point that a number of people have made. Alex Gladstein makes this point a lot in his talks about the use case for Bitcoin. That, look, where is Bitcoin most useful? It's most useful in places where money is unstable today and where they don't have access to things like the US dollar and the euro or the yen or the renminbi or what have you. I think you're going to see a lot of this more experimental stuff advance out there where it can be road tested. They need low transaction costs, which is what Lightning gives you. They need the speed, which Lightning gives you. And they need a currency that's better than the currency they own. And that can also get around capital controls, which a lot of these countries have. So I think all that is great. I think it's in a sense disappointing, or it's a little, I feel a little jealous that people in other countries get to use a lot of that technology before we do. But I think we're blessed in certain ways too in the United States, having an incredible innovation ecosystem that's powering a lot of this stuff.
Yeah, I think that's a perfect way to put it. Yeah, I would recommend to people, if you are curious to see how this technology is developing, though, something like going to the African Bitcoin Conference, because there's comparable technology being built all over Africa. It's being built in Latin America as well. And it's just really amazing to see the sort of innovative solutions that help people solve these everyday problems. That people aren't arguing that the whole world needs to be put on a Bitcoin standard. With these apps, those who want to live on a Bitcoin standard can do so without really having to think twice about engaging with traditional fiat systems, mobile money, all of this stuff. And from another perspective, the financial inclusion aspect. I was recently, when I was in Kenya, I was in the largest slum in Africa. And in that slum, you have a lot of refugees, and the refugees can't actually get digital IDs, which would allow them to take part in the mobile money economy. So they're all using on the back end their Lightning wallet and then interfacing as vendors or whatever they're doing with this. So I think, that financial inclusion narrative that, again, Alex Gladstein brings up a lot, it's tremendous. And it also does this really special thing to people. You see a lot of parents now planning for their children where they weren't doing that before, because they've actually seen this idea of their savings or their purchasing power go up over time. So I really hope that for people that are living in a situation like that, you're sort of in a certain situation where you're in a certain amount of pain where you're like, when someone comes to you with a solution like this, you're like, okay, great, I'll try it, let's do it. Whereas I think in the United States, that's not there as much. I'll put it that way. We're not as used to that. And on some level, it's sort of, I work in Bitcoin for a living. So it's like, I want more people here to understand it. But on a certain level, I think necessity is sort of the mother of all invention, and it brings more people to it. So I'm happy to see these sorts of solutions being developed abroad. And I think, oddly enough, they'll end up coming back to the United States. Eventually, some of these solutions will become more popular here, again, as the dollar maybe continues to lose value. But let's try to kind of bring this in on a high note. So you have three different cases for what the future looks like, or three general cases. There's the bearish case. We touched on some of that. You have sort of the middle ground case, and then there's the bullish case. So can we touch a little bit more on your middle ground case, and then maybe end on the bullish case, if you don't mind?
Yeah. Before we get to that, I want to make one last point on the Africa story,
Please,
which is that we should acknowledge as well. We Bitcoiners should acknowledge that stable coins have also played a massive role in helping people in these high inflation countries deal with their inflation. So yes, Lightning, Bitcoin, great. Stablecoins have also been a big part of the story in a lot of those countries, arguably more of the story than Bitcoin has been, which is all the more reason why having a decentralized permissionless approach to Bitcoin fiat exchange is going to be really helpful for those people in those countries, as well as in the United States in this dark restrictive scenario that I talk about in the book chapter. So to answer your question then about what is the middle case and the positive case, which I call the Palsy scenario and the Munificent scenario, because I had to use SAT words to describe the stuff so that it wouldn't be you would fall asleep reading it. The Palsy scenario is, it's kind of like, it's not exactly a middle case. I'd call it like a middle to bad case, because in the Palsy scenario, what happens, the worst case scenario is like we really, basically convert into a surveillance state to stop Bitcoin from being used. That's the worst case. The middle bad case is because Republicans and Democrats hate each other and don't want to work together, and there's separation of powers in our system, that the government can't basically get its act together. So we avoid the worst case surveillance outcomes because no one in the government has the power to impose them unilaterally, or maybe the courts block it or something like that. But we also don't have the ability through that palsied or paralyzed system to fix the problem, to solve entitlements, to actually get the deficit and debt under control. So we don't get the debt and deficit under control, but neither do we actually have the ultra restrictive capital controls, which does allow people to move more of their savings into Bitcoin and escape that kind of worst case outcome. But that's still a pretty bad outcome, because it means the fall of the US dollar, and therefore an enormous amount of disruption for people here. And one thing I point out in the article is that, those of us who are old enough to remember Occupy Wall Street after the financial crisis, they were always talking about the 1% and the 99%. And the 1% richest households in America in fiat, by fiat standards, owns about 24% of the wealth, and like top 10% has about 37% of the wealth.
Okay. I actually thought it was more. I thought the top 10 was...
It might be more. I don't have the chart in front of me, so don't shoot me if I'm misquoting my own chart.
You won't get shot. Yeah.
When it comes to Bitcoin, the distribution is far more skewed. So the top 1% owns something like 88% of all Bitcoin, top 1% of wallets, and the top 10% of wallets own 99.97% of all Bitcoin. And there's lots, you can quibble with some of these stats, but I think they're directionally correct. They're not going to be off by much. And the point of this is, again, I'm no communist. I want people to be successful. I believe in freedom and economic freedom. But the point, just from a realistic analytic standpoint, is if we have that economic crisis 20 years from now, or 15 years from now, or 10 years from now, in a democracy, the 99.97% who don't own the Bitcoin are going to be pretty mad, and wanting to take it out on the people who do own the Bitcoin. That's a very dangerous and unstable position to be in for those of us who are pro-Bitcoin. So how do we fix that? And this gets us into the more optimistic scenario. Either you elect a Javier Milei type guy who can actually help pull us out of the brink by through some sort of partial default and tough medicine. Part of it could be something like more politicians own Bitcoin, and so because the politicians own Bitcoin, they don't want to blow it up because their own savings are in it.
Yep.
So that's another way to perhaps evade that worst case outcome. And the best idealistic scenario would be for as many people as possible to actually own enough Bitcoin, even if they don't as much as the OGs do. They own enough Bitcoin that for them, Bitcoin's success is important to them. It's important to their own personal savings. This is why I think ETFs were really important. ETFs were really important because it allowed people who didn't want to self-custody, were worried about losing their passwords or their seed phrases. They could say, okay, I can buy this thing in my 401k. It has all these kind of this legal infrastructure around it. I can pass it on to my kids. It's really easy. And that's, again, a gateway drug for people to get used to how Bitcoin works. It's not the same as self-custody, but it is a milepost on the journey to self-custody. So the ETFs are like that. But again, the more people own Bitcoin or own a Bitcoin-related business or part of a Bitcoin-oriented business, the better. That's why growth in Bitcoin Treasury companies is very exciting. Full disclosure, I'm joining the board of Strive Asset Management. I think all the other Bitcoin-related businesses that are being built that do a bunch of different things, the more that businesses incorporate Bitcoin into the way they work, whether they're working on the Bitcoin ecosystem or they're Bitcoin treasury companies or whatever it is, the more the broader stock market and the more the broader universe of Americans benefits from Bitcoin success. And the more Americans benefit from Bitcoin success, the more likely the best case scenario is where we end up. And that best case scenario still involves a partial default, but it involves us getting through that temporary crisis out the other side and into a much better and more stable and more sound money based system.
Okay.
Again, maybe over time as the Bitcoin economy matures and the OGs sell their Bitcoin into the market, some of this distribution starts to flatten out a little bit more, or the curve becomes less steep. But we don't have a lot of time. And what I worry about is that if we get to that 15-year time horizon or whatever it is, and the crisis happens, again, in a democracy, the majority will win. And the vast majority of people today will be like, screw you, Bitcoiners. Polls suggest about 15% of Americans hold Bitcoin plus or minus, which is a large number. And that's very powerful in politics, which is good, right? Like, I think that was very important in the 2024 presidential election. I think Democrats who, like Elizabeth Warren, who are very antagonistic to Bitcoin, I think other Democrats are now coming in and saying, hey, Elizabeth, we've got to be a little bit more careful with this constituency here. So I think that's helping us. So that's like the first step is like, if we become a large enough special interest group, I suppose we can affect the politics. But in a real crisis, that won't protect us completely.
Yeah, agreed. No, I was going to say it is some of the data from the few data analysts that I follow. They do say that there are some OGs who do sell. Maybe it was at the $100,000 threshold. Maybe they just never thought it was going to get there, and they have such a large stack that they're like, you know what, I'm going to sell. Take some chips off the table, essentially go buy a big house or something. Who knows what they're doing with the money, with the cash. But it seems that there's some of that happening. But I tend to agree with you based on the data I've seen. It doesn't seem to be happening quickly enough, especially considering that only 6% of the Bitcoin ever to exist has yet to be mined, right? It's like most of it is already out there in circulation. So we have to sort of really consider this as a pretty huge factor. As a final question here, we have a lot of, obviously, Genius just passed. We're going to have the president sign it tomorrow. Clarity is looking pretty good. The one act that just feels like it kind of got kicked to the wayside a little bit was the Bitcoin Act. We had Senator Lummis introduce it in the Senate. Congressman Nick Begich introduced it in the House. Does two pretty important things. One, codifies into law the strategic Bitcoin reserve. To me, even the more important thing, or the thing that excites me more, codifies into law the right for Americans to hold their private keys, which I think is quite important. Do we keep this momentum into getting the Bitcoin Act passed, in your opinion? We're at Crypto Week here in DC. Momentum is high. Are we going to have another sort of Crypto Week where the Bitcoin Act is at the center of, or do we have Bitcoin Week where the Bitcoin Act is at the center? We have President Trump and, pushing for the Bitcoin Act to get signed. And I'll preface this by saying it kind of worries me a little bit because Bitcoin not having its own foundation. We have David Bailey, right? We have Bitcoin Magazine. This is our proponent in DC, kind of.
And he's been amazing. We
He
have to
has
give a shout out to David Bailey. He has been a tiger.
Absolutely amazing. But, with these other crypto entities, you have these huge funds behind them and the lobbying efforts and everything. So getting stuff crypto related across the line, it's not super surprising to me because a lot of money went into this. Getting specifically Bitcoin related things across the line seems like it's the big question mark right now. So I'm curious to hear what you think about this. Do we see the Bitcoin Act enacted into law within the next, let's say, 6 to 12 months?
If you put a gun to my head and force me to bet, I would bet no. I think that Congress, this whole crypto week thing was a great political marketing tool, and it worked, and I think that's pretty impressive. But I think Congress is going to say, okay, we've been there, done it. We did our crypto thing. Now we're going to move on to other priorities. They're unlikely to turn back to Bitcoin, I think, in this Congress, because they're going to be like, we did enough for you guys. We've got to now serve our other constituencies. They're going to be the lens with which they think about it. So I think legislation's probably not in the cards in this Congress, but I think executive branch activity is still going to be pretty robust, right? There is the ability for the Treasury Department and the executive branch in general to, as they've already or ordered through executive order, to compile, okay, where is all the Bitcoin that we hold? Let's make sure that we're systematically inventorying that and putting it in a discrete system. I think that's all stuff that can progress. That's obviously drove a lot of Bitcoin's appreciation price-wise in 2024. What we have to sort of look at in terms of legislation from a Bitcoin-specific legislation standpoint is probably not much in the near term. And with the possibility, I don't know if it's a probability, but let's call it a possibility that Democrats capture the House in 26, then that's probably going to kill more momentum for more Bitcoin enabling legislation, I would think, just because the Democrats are divided on it in a way that, and Republicans aren't exactly like unified around. They're just more pro Bitcoin today than Democrats are in general. But there are plenty of pro Bitcoin Democrats, and they just won't have the upper hand if Democrats take one or both chambers in the midterms. Now, maybe they won't. And I would say that if Republicans somehow manage to retain control of the House and the Senate in 26, then I think you could see the Bitcoin Act take center stage in the next Congress. I believe would be the 120th Congress, because that would be our chance to come back at it. I think we have to recognize that the crypto industry, in terms of its lobbying power, is much larger than the Bitcoin industry, and that's a big part of why it's Crypto Week, not Bitcoin Week. Now, David Bailey has done an enormous job of basically changing that equation to a degree, and more people involved in the Bitcoin space. I should say the Winklevoss brothers have done a lot of others. There's a bunch of people. I don't want to neglect or not recognize the people who have put in a lot of work, but we need more. We need more people in the Bitcoin space to be active in terms of both technical briefings for members of Congress and also financial support, because for whatever it's worth, that's how politicians pay attention.
Yeah, absolutely. So you brought up the amount of Bitcoin that we have and how much the U.S. Marshals are holding and how we'll secure it. So we just had this information released based on this FOIA request from that Lola Leeds put in. Props to Lola for doing that. I think it's great that she did it. I've contacted the U.S. Marshals a billion times and asked them how many Bitcoin they have. They've never gotten back to me, but I'm glad that somebody put in the proper paperwork. I guess that made them sort of have to do so. We have 29,000 Bitcoin, it seems. I don't know if maybe some Bitcoin is being held by other parts of the government, but U.S. Marshals hold 28 and change. This is far fewer than the 200,000 that some people talked about. It's fewer than even the 100,000. Some people said maybe the Biden administration sold half of it. This is like almost about a tenth of the 200,000. Does this kick Bo Hines and David Sachs into gear when it comes to coming up with this budget neutral strategy for the U.S. to accumulate Bitcoin?
It might. And look, I think this is where the BitBonds idea is really interesting, right? Because it allows the government to accumulate Bitcoin and also issue Treasury debt in a way that I think if you test the market for those kinds of products, I bet the appetite could be really significant. So I think that's an area to focus on as a possible area of progress. One thing we should really highlight, arguably the biggest policy win of the last 12 months that was not about the Bitcoin strategic reserve, was the change in FASB accounting rules.
Oh yeah. Yep.
That because it used to be, and some of your viewers and listeners will know this, but it used to be that you basically were penalized by this industry standard accounting rules for holding Bitcoin on your balance sheet. Basically, if you held Bitcoin on your balance sheet, you were penalized if you lost money on it, but you weren't rewarded if you made money on it.
Yep.
And that changed. Now Bitcoin is basically like any other asset. You can market to market, and basically if it goes up, you can basically count that as an unrealized gain. That is again something that's sort of technical that maybe a lot of people weren't like breathlessly following, but arguably more important than anything else that we've talked about in terms of recent policy developments for Bitcoin,
Yep.
because that's what's enabling all these Bitcoin treasury companies to come to market. It's going to basically, the next time MicroStrategy or Strategy now announces earnings, it'll be the first, I believe the first, I can't remember if it's the first quarter, the first full year where they can report earnings with this new accounting standard. And that is going to basically turbocharge the market, because they're all of a sudden going to be very like earnings positive. And again, all the companies that are, whether it's specifically a Bitcoin treasury company or just a normal business that wants to hold Bitcoin on its balance sheet, Strategy's financial results are going to prove that you can hold Bitcoin on your balance sheet and that it's accretive to your shareholders. And that is going to turbocharge the interest in for the private sector, particularly publicly traded companies, to own more Bitcoin. And that's, frankly, in terms of the amount of Bitcoin that the private sector is capable of buying versus the amount that the government could buy.
Right.
I actually think the private sector piece is much more significant.
Yep.
And will turn out to be the much bigger policy win when all is said and done.
Yeah, it's fair. I would offer maybe an asterisk or a caveat there saying, I mean, technically the government could just print the money and buy the Bitcoin. But I think the way that some of these treasury companies are structured, I mean, some of them are very basic. You have Semler Scientific, where they just have a decent amount of cash flow, so they're buying Bitcoin. That's great. But this ability for the companies to kind of, in a way, through the way that they issue debt, become almost like their own money printer and sort of create this extra debt or extra shares, or however they structure it. It's different for each one. But, you know, turning something that's kind of infinite might not be the best word, you know, trading something like that for something that's scarce to put on their balance sheet, doing that, obviously, you know, with a very good strategy, not going overboard with it. I think the only thing that gets me a little bit nervous about this right now, I had this conversation with George McHale, the head of Bitcoin for Corporations, and Stefan Livera yesterday, is, you know, there's a lot of these companies, the ones that are gaining traction are the ones that are making big moves right now. It's not necessarily the Semler Scientifics or even a company like Fold, who has a great cash flow business. They're holding some Bitcoin on the balance sheet. Technically a Bitcoin treasury company. It's the ones that are sort of making headlines about how much Bitcoin they're buying. You know, it's just, you just sort of hope people don't get too far ahead of their skis and that they do have sort of a good risk strategy in place for all of this. But I 100% agree. There's so much funding that's available. Capital is cheaper to private enterprises. And sort of the amount of Bitcoin that they could accumulate with a good strategy, it just seems like we could go a lot higher from here based on that dynamic for sure.
Yeah, I'll tell you two things about that. First, I totally agree that there will be companies that get out over their skis, particularly in terms of maybe piling on too much debt in order to buy the Bitcoin and then not being able to withstand a downturn. I think that's a real risk.
Yep.
But I think I will say two things in response to that. The first is I can tell you at Strive, which for those who don't know, Strive is Vivek Ramaswamy's asset management firm that was originally focused around ESG investing and fighting that fight, but has pivoted now into becoming a Bitcoin treasury company, and has raised $750 million initially, with another $750 coming through warrants and some other things. I can tell you at Strive, we are very, very, very aware of that issue and are designing Strive to be resilient to market downturns and to, as Michael Saylor would put it, use leverage modestly,
Yes.
but in a way that is resilient to downturns. I think that's extremely important for the long-term sustainability of these companies. And I think the leaders in the space are there. I think it's maybe where you get to the next tier where maybe the fine print on some of the deals they're doing are not
Yeah.
as attractive as they look on the surface and aren't in those headline news reports because those people aren't reading the fine print in the SEC filings. So there's a lot of stuff like that I think people should look for in this space. But what I'm, at least for now, reasonably relaxed about it, my view could change, but I don't think those smaller companies that are maybe over leveraging themselves to raise more Bitcoin and putting themselves in a vulnerable situation, they're not systemic risks to Bitcoin, right? So when FTX blew up and took down BlockFi and Grayscale and
Voyager,
all the different big pieces of the ecosystem at that time, that was a relatively systemic event. It wasn't systemic in the sense it blew up Bitcoin, the network, but it did take us into a bear market for a considerable period, right? I don't think we are in danger of that, at least in the near to midterm, because Strategy is very levered. They have, I think, an 8% 8% debt relative to their market cap. They're going to be fine if there's a massive downturn in Bitcoin. And all the other players are so small that they're kind of minnows compared to that whale, that Strategy whale.
Yep.
So I don't think the systemic risk is there yet. Now, it could be that in 5 years, if this whole ecosystem grows and becomes massive and there is a lot of leverage, we should start to worry about that. But we're not there yet. And I'm optimistic that the people who are running Bitcoin strategies, who are Bitcoiners, understand this problem with the banking system. I mean, we all grew up or cut our teeth with the financial crisis. Of course, the Genesis block had the headline from the Times of London. So, like, this is in our DNA as Bitcoiners, right? We understand that over leverage is bad, and my hope is that ethos sustains us with the growth of this particular sector.
Well, I think that's as good of a place to leave it as any. Avik, thank you so much for taking the time to do this. Can you let people know where to find you and your work online?
Yeah, so I'm findable on Twitter. My Twitter handle is just my first name, AVIK, A V as in Victor, IK, and my think tank is called FREOPP.org, FREOPP.org, and my writing can also be found at the Bitcoin Policy Institute and other websites near you.
Amazing. Well, Vic, again, thank you so much for taking the time to do this. I look forward to doing it again, hopefully in the next few months. Hopefully we'll be talking about the Bitcoin Act getting signed into law. I'll be the optimist here of the two of us when it comes to that, but we really appreciate your time and we'll be in touch.
Hey, I hope you're right, and congrats on making news today at the White House press conference.
Appreciate that. Sounds good. All right, well, we'll talk soon then. Take it easy.
Thanks, Frank.